let's take a look at the S&P 500 as we get ready to wrap up Q2. It's Q2, right? Yeah, Q2 of 2021 and the month of June. And as we get ready to roll into a new quarter, a new month, and the 4th of July holiday, I had a note on my calendar that the last two trading days going into the 4th of July holiday are an 85% percentile up day. So that means 85% of the time over the course of the time that that statistic has been watched, we usually rally into the 4th of July holiday. And we are just coming off of a big rally week. This is our 5-minute chart. And as you can see, not the Friday that we just traded, but the Friday before that, we really had this nasty gap down and sell-off down to a new low for the month of June down at 41.6440, only to come in on Monday and begin to crawl out of this, this pit that we fell into. This turned out to just be a June week 3 OPEX and ES contract expiration kind of fuckery thing where there were just games and bets going on, pushing us down, because look at what happened all week long. This is the entire week in the 5-minute time frame, starting with Monday, and then Tuesday and Wednesday. Looks like things flattened out a little bit. A gap up open on Thursday, and a move sideways, and another gap up open on Friday, and then ending the day and the week on a brand new all-time high. And look where our all-time high is, 42.86. So we are really up there into the 80 handle rule. And my guess is that we are going to push on through to 4,300 and end the quarter somewhere up in the 4,300s, playing out the 80 handle rule game here. Okay, let's take a look at our simplified daily chart. Last time I did a video for you, I threw on here this bear fork based on that sell-off that we were seeing happen last week. Not the week we just traded, but the week before that, in June week 3. And you can see here as we broke out of the top of this new bear fork, this really acted as a great, as a great line of breakout that you could judge it by. And you can see that we just ran up out of that element. So we can take this element now and we can just remove it and continue back on looking at our ultimate element that has been working for us since the end of October of 2020, the bull fork. And the median line of that bull fork rises to 44.83 on Monday. This is going to keep on rising through 4,500 as next week goes on. And I've rolled this back for you a million times, but even as you can just see here in this more close-up view, all of our highs eventually meet the median line of this fork, as long as the bottom of the fork is not broken. And our last sell-off here came within a few points of it, but bounced off of that and went back up. So ultimately, we are shooting for the median line of this fork. That is ultimately where we are going, by way of some speed bumps here at the low 4,300s. 43.26 is a measured move target. It's times 2 up the entire range that we traded in Q1. This would be a very interesting place for us to rally up to and hold and close the quarter above, because that means that we took the entire range of the first quarter and doubled it in the second one and closed above it. This also aligns to this 43.26 level aligns, I'm pointing over to the left now, aligns to the plus 15% mark on the year at 43.1950. So those low 4,300s, as we rise up through that 80 handle rule and push to 4,300, we usually push on through to maybe 43.25 to 43.35 and kind of stabilize out there and see whether we roll on back or we push on through to 43.50 and start the 80 handle roll all over again, going towards 4,400. But for now, for this week, let's just concentrate on this 43.26, maybe a little higher than that, and then settle and close the week out above this 43.26 level. Let's see how that idea plays out. Here's our roadmap. Here you can see in a more close-up version how this June week 3 thing worked out and gave us a new low for the month of June, and how we've risen out of that. Our immediate lines below us for support are obviously going to be Friday's low and filling this gap to Thursday's close. I think as long as Friday's low holds, or at most if we break Friday's low and just kind of fill the gap or look above this gap and reverse above Thursday's close, we're going to continue on that stride towards 43.26 to maybe 43.35 as the week goes on. If we break down below this stuff, then we've got another gap all the way back here to Wednesday's close, and the 10-day simple moving average is moving up right to there. If we stand with 42.86 for a bit as our high, our June halfway back here is going to be 42.25.26, and that is what is going to hold us if we were to dip down and fall below the 10 and the 20-day, the halfway back point for the month of June. And when you look to the left, you can see a lot of stuff was going, a lot of consolidation was going on here at this level, this 42.25 to 26 level. And I bet that's exactly what it's going to be like when we get up to 43.25 to 26, like I just showed you on the chart, and double up that Q1 range. You can see all of this consolidation that was going on here. So like I said, as long as Friday's low holds, we're going to keep on going. If Friday's low breaks, we'll fill the gap to Thursday's close. And a worst case scenario is that we come down here and we test these moving averages one more time. If that happens, that is a great buying opportunity for that blast off to that 43.26 to maybe 43.25 level to look at for the end of next week. Let's just take a quick look at the options and then wrap up this video. Here, I've got the June 30th. These are the quarterlies. This is the Wednesday expiration. I don't like to play Wednesday expiration, but since it is the quarterlies, I think this would be okay. These might be especially good if we do come in and see a little weakness on Monday. If we have that situation where we fall back and break Friday's low and maybe fall back to test the 10-day simple moving average, then maybe you want to look at these puts. And I can see a lot of volume standing out here at these 42.50s. There was over 6,000 of those that moved on Friday alone. And at 42.50, that would totally be that back test and hold, maybe filling this gap back to Wednesday and holding above the 10-day simple moving average and reversing. So if that played out, you'd want to try these puts out, get out of those puts when we come down here to the 10-day and look at the Friday, July 2nd calls at that point. Over on the call side, there was a lot of volume, some pretty good volume here up at 43.25. That rhymes with the target that I showed you on the simplified daily chart. But if we were to pull back, down here to the 10-day or something like that, you could come all the way down here and maybe get into these 4300s or even get into the 4290s or something like that. These would probably fall back to the $8 window for a great entry from there. If we come into the day just strong and continue to rally higher, I think as far as calls go, you want to try and stay in these July 2nd, the Friday ones. I really only want to use the, if you really want to take your chances, there's just a tendency that if we don't just make a move on Monday, these kind of get gamed because they're the Wednesday expiration, and they could just be a hedge against the Friday expiration, which is why I never like to use them. But if we came right out of the gate running on Monday, you could look at these 4300s for the quarterly expiration, but I would really prefer to see everybody be in the 4300 Friday, July 2nd expiration rather than the Wednesday ones on the call side. For the quarterly expiration, like I said, I do like those puts. I like this 42.50, or if you want to go a little higher, but there was a lot of volume here in these 42.50s, and that's if we come in weak and we see Friday's low break and we start to fill these gaps, and we're looking for a target down here to fill the gap to Wednesday's close and turn at the 10-day simple moving average, and then we come in and buy the Friday, July 2nd calls. Okay, hope this video made sense. If you have any questions, you can shoot me a message, a direct message on Twitter. And I'm going to have some time on Monday. If you have any questions, I can certainly answer them on Monday. Have a great rest of your Sunday evening. As always, good luck and good trading.